Disclaimer: this content is for educational and informational purposes only. It is not financial, investment, tax, or legal advice, and I am not a licensed financial advisor. The opinions shared in this video are my own and are based on my personal investing journey and experiences. Always do your own research and consider consulting a qualified financial professional before making any investment decisions. Investing involves risk. The value of investments can go up or down and could lose some or all of your invested principal. Past performance does not guarantee or predict future results. Nothing in this video should be interpreted as recommendation to buy, sell, or hold any security. You are solely responsible for your own investment decisions. Hello and welcome to Always Be Investing. Today is Wednesday, July 15th, day 6 of the journey. Another $100 goes into VTI. Great news today. Cooling wholesale inflation, strong earnings, index is green. Tonight's simple lesson: good news is nice, but the habit is the strategy. Today's market scorecard. All three major U.S. indexes closed higher. The Dow, S&P 500, and NASDAQ were all up. Green days feel good. They still do not prove tomorrow. Beginner takeaway: the market reacts to news fast. Your plan should not need to. The big good news. Wholesale inflation cooled more than expected. Producer price index, negative 0.3%. Year-over-year PPI, 5.5%. Plain English. Prices companies pay went down for the month. That can ease pressure on businesses, consumers, and the Federal Reserve. Good news does not mean mission accomplished. Inflation is cooling, but still above the Fed's target. That is why the plan stays disciplined. What PPI means: a beginner translation. CPI is the prices regular people pay. PPI is the prices businesses pay. Why it matters? If business costs cool down, that can reduce pressure on future consumer prices. Simple chain: business costs cool, inflation pressure eases, markets breathe easier. Why stocks liked it. Cooler inflation can lower rate pressure. Inflation cools, bond yields ease, stocks get support. Beginner version: when investors think interest rate pressure is easing, stocks often respond positively. Not always, but today that was part of the story. Do not turn this into a prediction machine. The other good news: earnings season started with strength. BlackRock beat profit expectations. Shares rose. Morgan Stanley reported strong profit growth. Big picture: companies are still making money despite the noise. Markets care about profits. Over the long run, owning the market means owning the earnings power of thousands of businesses. Stocks are near highs again. The S&P 500 moved within about 0.5% of its record. This is why waiting for the perfect can get expensive. Markets can recover while people are still nervous. Good days often come without warning. A steady habit removes the need to guess. ABI lesson: I am not buying because stocks are near highs. I am buying because this is the plan. One stock jumped huge. PayPal reportedly surged on buyout talk. PayPal move plus 17%. Beginner lesson: single stocks can move fast on a single headline. That can be exciting, but it is also why concentrated bets are harder. VTI is boring on purpose. Thousands of companies, less drama than chasing one ticker. Not everything was green. That is exactly why diversification matters. Mega cap tech helped. Large tech names supported the market. Semiconductors lagged. Some chip stocks struggled today. Broad funds balance it. VTI does not need every sector to win every day. The market is not one thing. Some parts rise, some fall. Broad investing owns the mix. The warning label: good news does not erase risk. Oil stayed elevated. Energy prices remain a wild card. Middle East tension. Geopolitical headlines can move markets quickly. Inflation still above target. Cooling is good. Finished is different. Stay excited. Stay sane. That is the tone. Positive, not reckless. The Fed is still cautious. One cool report does not end the story. Markets lowered expectations for another rate hike, but Fed officials still want more evidence before declaring victory. Do not wait for perfect certainty. Beginner translation: adults in suits are still debating interest rates. I am still buying $100 of VTI. Why VTI fits the moment? One fund, thousands of U.S. companies. Fund style, broad. Strategy, simple. Timeline, long. The boring part is the edge. My approach? I am not trying to pick the one company, sector, or headline that wins today. I am buying broad U.S. market exposure and repeating the process. Today's buy: same move, new day. $100 into VTI. Total invested, $600. Small money is not small. The habit is the machine. Day 1 through 6, $100 became $600. Not from luck, from repetition. Beginner mindset. Do not judge the first week by the size of the account. Judge it by whether the habit is forming. What not to overreact to. Good news can make people reckless. Do not chase a stock because it jumped today. Do not assume inflation is gone forever. Do not think one green day proves anything. Do not abandon the plan for the headline. Stay calm when it is red. Stay disciplined when it is green. The rule? News is for learning. The buy is for consistency. In closing, today was a great news day for the market. Wholesale inflation cooled, earnings looked solid, and all three major indexes finished higher. But I am not investing because today was green. I am investing because this is the plan. Another $100 into VTI. Day 6. Total invested, $600. Good news is nice. Consistency is the strategy. This is for educational purposes only. It is not financial advice. Always be investing. Day 6 complete. $600 invested so far. One simple plan, $100 at a time. Long-term ownership over short-term guessing. Subscribe and follow the journey.